Good morning, everybody. It's Dan Kautz.
Good morning, Jeff Buckley.
And we're here just to reach out to our clients to touch base with them during some of this turbulent market time.
Yes.
And we just want to talk a little bit about what a tariff is and how it will, what we know now and how it will probably affect our portfolio. But there's definitely more information to come as this unfolds. So, Jeff, why don't we talk about what a tariff is and why the tariffs were imposed?
Sure. Well, I'm sure everyone is heard, is following. It's been headline news on the markets. The markets are in quite a bit of volatility now. They've been significantly pulling back, and it's all due to the fact that the president has imposed tariffs on our trading partners. So we thought we'd start kind of at the very beginning. And what is a tariff? You take a moment just to think about exactly what that is, and just got a very kind of a general definition here, but it's really a tax. There's some people out there that will argue about the use of the word tax, but really what it comes down to is it is a tax that the government places on goods and services imported from other countries. All right. When borders or products cross a nation's border, the importing business pays this tax to its home country's government. Tariffs are typically calculated as a percentage of the item's value, known as an ad valorem tariff. All right, gets a little specific there, but the point is anything coming into this country is going to be subject to additional fees, which will result more or less in a tax here that gets paid to the United States government. So why are we doing this? Why are these tariffs being imposed by our president? Well, the purpose is to protect domestic industries, and by making imported goods more expensive, tariffs encourage consumers to buy products made locally, shielding domestic businesses from foreign competition. All right, that's a big hallmark of President Trump's election, his entire portfolio, agenda, everything. Yeah, I mean, his point is he wants to put America first, so he's trying to make it really unprofitable to produce goods anywhere else in the world. He wants manufacturing to come back to our shores, and we produce our goods here. Now, they generate government revenue as well, and he has pointed to that as a reason, that tariffs provide a source of income for governments, especially in countries where other forms of taxation might be limited. We have the income tax, but as we all know, President Trump, we have some tax cuts that have already been passed during his first term. They were continued through President Biden's term, and now those taxes will be sunsetting. So we need to, if we're going to continue or extend those tax cuts beyond really next year, we need to have another source of revenue. So certainly tariff income could generate that revenue. And it also addresses trade imbalances. This is something that President Trump has been pushing out quite a bit. When he made the announcements of these tariffs, he had a list of how his administration perceives the trade imbalances with a number of countries in the world, just about every country in the world, and he feels that the United States is not being treated fairly. So a tariff is a way to try to equalize that, and that's why they've been imposed. So now, what we know at this point is President Trump imposed a 10% baseline tariff on all goods imported into the United States from all countries. So that's kind of a blanket tariff that's been imposed. But then he went further and he imposed additional tailored tariffs on about 60 countries that contribute the most to the U.S. trade deficit, which unfortunately last year in 2024 was about $1.2 trillion. And he's placed the most barriers on, or these countries are placing the most barriers on U.S. exports. So this is an attempt to try to get them, we believe, to come to the negotiation table to try to reevaluate their trade policies, lower those tariffs that they're imposing on goods imported from the United States into their countries, and hopefully equalize our trade imbalance here. Now, how are these tariffs going to affect the U.S. economy? Well, our economy is based significantly, about 70% of our U.S. gross domestic product is based on consumer spending. That makes consumer spending the largest driver of the American economy. So consumers are directly affected when tariffs are imposed because they have to pay more for goods, right, resulting in inflation. So the longer the tariffs remain in place, the greater the chance that their impact will reduce and eventually eliminate the growth of the U.S. economy, resulting in a recession. So we're all hopeful that we've got the initial shock of the imposition of the tariffs. We're now starting to just now beginning, as we record this, beginning to see the response from the countries against which we've imposed these tariffs. We'll see how this plays out, but the hope is that whatever the outcome, these tariffs are addressed and hopefully lowered or removed entirely within a relatively short period of time so that our economy can continue. Because before these tariffs were imposed, our economy was in a very strong position, and we certainly want to get back to that.
No doubt it was. No doubt it was.
Yes.
Listen, Jeff, thanks a lot. And I'm looking to you and telling you know. Let's tell them out there. Jeff and I have been attending a lot of meetings. Rochester, we were in Phoenix recently. We have a lot of economists that come in and talk to us, and they're from the money managers that we use and from Asset Mark. That different points of view, but pretty much are all agreed on what Jeff was just saying, that these tariffs are hanging around a while. There are going to be some very bad days, but I don't want to get people scared. I want to make sure that we stay invested and we stay focused on the true signs of the market. Let's turn our attention towards the what ifs. This is just one of the many charts that we've pulled out from meetings that we've been to. And this is if the United States imposes a 25% tariff, which we have, and it only looks at 2 of the countries, which we've already imposed over 60 countries, I believe, imposed tariffs, and 10% on anything that comes in the United States. So let's just take a look at our neighbors, Canada and Mexico. And if we focus just on the darker numbers here, the U.S. imposing a 25% tariff, it will make the United States gross domestic product fall by almost 0.25. We know that's going to be coming. Canada's, however, will fall 1.16, and Mexico's will fall 1.14. And that's just with us imposing the tariffs. But to Jeff's point, what we hope this does is brings our counterparts to the table so we can renegotiate our trading agreements. This is the hope that we have behind that. However, as Jeff mentioned earlier, is inflation will happen. 25% tariff imposed by the United States. The U.S. will see an inflation of about 1.33. Canada will actually go down almost 3%, and Mexico's inflation will go down almost 9%. That's just if we impose 25%, which we have. If they retaliate, then we look at the white numbers. If Canada and Mexico retaliate against us by adding equal tariffs, the United States gross domestic product will fall by 0.3. Canada's will fall by 3%. Mexico's will fall by 3%. So if they impose a retaliatory tariff, it really hurts them. That is why I believe such a strong position was taken right out of the gate. Then inflation is it will hit us a little more. Our inflation will go up only 0.77. Canada's will go up 4%, but Mexico's will drop. This is just the gaming it out just with the 2 countries. The whole idea here, though, in this chart shows that we're going to feel less pain than the other countries. And we hope that they realize this, come to the table, we can talk about renegotiating our trade positions, and we can end these tariffs. This is nothing new. 10 times since 2004 have we had trade wars. Most of them have been with China, some have been with the EU and Canada, but most have been with China. And the reason why was to protect our goods, especially against China, and also political sanctions. What does this mean to us here at home, though? Jeff and I have been obviously talking about this the last 2 days, as this has gotten imposed and actually come to light. The market's falling fast. We have seen market pullback like this before. We've lived through it, and it's going to most likely rebound by the end of the year. What we're asking our clients is just to stay focused and stay calm. And the reason why is because you want to stay invested. And the reason why is when this turns around, you want to be there. Just as you were there being invested when this hit and you saw the portfolio go down, you want to make sure that you're still invested when this turns around so you can get the ride back up. Cutting out the cash, which nobody has called us for. that I know of. Cutting out the cash is going to lock in your losses. However, doing active and tactical trading right now, which is what our money managers do, this is where we might sell some stuff right away and redeploy at a lower, we can redeploy that money and buy stock at a lower value and get ready for the rise up. So we just want to reach out and touch our clients, and let you know we're here. So if you have any questions, any concerns, please give us a call here, and we'll be able to talk you through and how your portfolio is being managed and where you stand, and talk a little bit more about your concerns.
Yeah, and just one final thing too, to kind of maybe bring this into perspective here. The markets are always volatile. We all know that. A frame of reference here is, as we record this, we're a couple days after the imposition of the tariffs, and like I mentioned earlier, we're just now starting to see some of the reciprocal tariffs come in. We don't know where that's going to go over the next several days and weeks, even months here. But where we are currently, with the significant market pullback already to date as we record this, we're looking at, we're about where we were in the financial markets last August. All right.
Point.
Yeah. So if you recall, that was as we were ramping up to a presidential election. The markets tended to move higher toward the election. When we got a result, not necessarily the result everybody wanted, but the point was we knew who our president was very quickly. There was concern that that was going to linger on forever, and the markets rallied after that election and continued to rally at least through January, February. Now we've pulled back and we've lost those gains, but really only back to about where we were in August. So if you keep that in perspective, it might give you kind of a sense that we're still in an okay place. This is just some extreme volatility due to these tariff events.
Excellent points. And the important thing is stay at the party, so when the party turns and the market comes back, you can participate in it. I want to thank everybody for tuning into this special webinar that we had here. Yes. But please remember, give us a ring if you have any concerns.
Yes.
All right.
Thank you.
Take care. Bye-bye.